Good morning and welcome this morning. There's the opening bell. It's Trading Futures. My name is Ben Watson. I'm joined by my good friend, Michael Fairborn, out there in the chat. Michael Fairborn, great educator and phenomenal instructor and a good friend to help cover this class when I'm not here. I'm glad to have him with me. I'm also glad to have you all with me as well. It was good to meet a number of you. Well, it was good to meet everybody that I met at the live event. Thank you for being here with us. We started talking a little bit at that live event last weekend about introduction to futures. So hopefully some of you are coming to kind of follow through with that. That's great. There's some stuff moving in the market today, so I want to jump into that here pretty quickly. But quick reminder, you've got that chat there. Michael's going to be there to help answer those chat questions. Whether you're here in the live version or the recorded version, we're glad to have you with us. And thank you for joining us in this webcast. So let's jump into a couple of things here really quickly. A quick reminder that everything we talk about is simply for illustrative and educational purposes only. Remember that futures and futures options trading involves substantial risk. It's not suitable for all investors. Make sure that you understand the risks and characteristics of futures trading before considering any futures transaction. Make sure that you read the risk disclosure statement for futures and options. Remember that futures accounts are not automatically granted. That is separate trading authorization, and not all clients will qualify for that. Now, a couple of other things. Remember that we're using the Thinkorswim desktop software platform today, specifically the paper money version of that platform. Some things don't work in the paper money platform that do work in a live trading environment, namely studies in scans and things like that. So be aware of some of those differences. But remember, it's not a guarantee of future success out there in the real world. It is a great learning environment. That's what we're going to use today. And also remember that past performance is not a guarantee of future results. And then when we talk about stop orders, when it comes to futures contracts, remember that stop orders are a little bit different. A stop order that generates a market order will be substituted by an exchange designated limit order based on protection points. So there is the potential that that order does not get executed. So be aware of that, especially in a fast-moving market. That can be a concern, as can be the concern of bracket orders in a fast-moving market. So we'll talk about that a little bit more as we get into the discussion. But I wanted to jump into this really quickly here because there's some stuff moving around already this morning. So I wanted to get right into this discussion, taking a look at heating oil this morning, which is kind of the proxy overall for a lot of products, not the least of which is jet fuel. And we're kind of coming out of heating oil demand season from a heating oil product standpoint, right? From heating your homes. But it's summer flying and summer driving season. So diesel demand is picking up, jet fuel demand picking up generally as well. And so we can see over the course of the last little while, heating oil /HO is the futures contract, which is a distilled component of crude oil, has been pulling back a little bit, but finding a bit of a support. On the one-year chart, which we'll pop over to you on the left-hand side here, and I'll just maximize this particular cell, we can see that it's overall been drifting a little bit lower, but what I've noticed over the course of the last month or so is this little bit of a bullish move off of the bottom. So we've kind of got this double bottom, or maybe very, very slight inverted head and shoulders pattern kind of building itself up here. Right-hand shoulder, if we want to think about it from that standpoint, left-hand shoulder, head, right-hand shoulder, starting to make that move to the upside. And this move from the $2 range up to maybe this 219 to 20 level would be kind of the expected move if this pattern is kind of completing itself. Now, once it gets to that resistance level, because we've got a bit of an ascending triangle, a bit of that inverted head and shoulders perspective, that would suggest about a dollar move almost, well, not quite that. So here we are, 1.95 up to 2.2. So that would put us at a symmetrical target up around this 2.3 mark. So we could trade this a couple of different ways. I want to trade this looking at the short-term perspective first, and then maybe think about the longer-term perspectives. Now, listen, I know we just kind of jumped right into this. I want to get on this trade example and idea simply because it's moving, and I want to illustrate this, and then we'll come back and we'll talk through the rest of the mechanics here in terms of notional value and those types of things. So I want to shift over to the right-hand side of this grid, and this is the today's market 5-minute chart. And the reason I'm looking at this is because this gives me kind of the more granular view. Each one of these candles represents 5 minutes of trading. So what I'm seeing here from a technical analysis standpoint is this kind of big bull flag that's going on. We got a little bit of a squeeze going on at the apex of this bull flag, kind of at the bounce level. But what I'm going to do is I'm going to take this from a technical analysis bull flag. I'm going to draw a trend line to the top of that flag. And I'm just going to go to the top of the candle here to that high. And I'm going to kind of squish this down just a little bit. And I'm going to take that line that I drew and I'm going to duplicate it. And I'm going to put it right up here. In fact, I'm going to just take it back down to this support level that's been established right there, right? And so what that now suggests, if I kind of squeeze this out a little bit, is that my target in this particular case, and I'm going to add a little bit of space out to the right-hand side. I'm going to add another 20 bars to the right so that we can see that. We can see where that target is. That's going to put my target on this move, if we get this bounce above this level, up to about 2.08 on this contract, right? That's going to put my stop or my exit point. I could go all the way back down here. I'm in fact going to come back off of this level just a little bit, this support level that's creating kind of this bull flag bounce. I'm going to come off of that level, not all the way down to this level of support, but down here right around that 2.0632 mark, simply from the standpoint that I want to get out quickly if this starts to reverse to the downside. Ultimately, I'm looking at this move going higher, right? And looking at this move coming up to this flagpole target. So this would be very similar to setting up to the way we would set up potentially a bull flag short-term bounce type trade on an equity. From the technical analysis standpoint, there's really no difference here in this case. So I'm simply using some levels to determine where I'm going to exit the trade. So I'm going to draw that line in here at that support, 2.0635. And my target in this particular case, based on that symmetrical target of the bull flag, is 2.0832 to the upside. So let's put the trade together and let's get this trade put in. So what I'm going to do is I'm looking for an entry point here. Now, I've already kind of had, if I look at where the low of this pattern is, I've already had that closing candle above the high of that low candle, right? So going back to that hold, right? Yeah. So taking a look at this here, I don't need to see a move higher. I do want to see this continue to move up a little bit instead of keeping going down below this level. So I'm going to place my entry order a little bit higher here as a buy stop. I'm going to say buy stop at 2.0679. So what I'm going to do is I'm going to right click and we're going to buy custom with OCO bracket in this particular case. So I put my buy stop in here where this is. So I'm going to click on stop, and where we specified that order, where we put that order in place. So let me move this over a little bit. 2.068 was right there, right? So if this keeps going down, it's not going to trigger. If this goes back up, it's going to trigger. So we're going to wait for that trigger to get in. Now we're going to specify our limit order to get out. Now, this isn't going to be worked as an exchange designated limit order because we're submitting it as a limit order. And we're going to say we want to get out at a limit of 2.0835, right? So we're going to change that limit order to 2.0835. Good till canceled, because this might happen today, it might not. and we're going to place our stop at 2.0636 below, and 2.0636. Now, we could specify this as a limit order, and let's do that just so that we can see how that works. So we're going to make this a stop limit, and we're going to trigger that stop at 2.0636, and we're going to specify the limit range at 2.0611. So our limit is going to be 2.0611. And now what we're doing is specifying that range in which we want this order to get filled. The problem is if we get a fast moving market, this may move through there before that fills, and it won't fill. We may get gapped around, right? So, and you're right, George, heating oil is pretty correlated with crude oil. Generally, that's the case, unless there are some supply and demand imbalances. In fact, we're going to talk about crude oil here again in just a minute. So we're going to look for this bounce and the move higher. There's our order specifications. We've put those in. Buy stop, 2.068. We're at 2.0686 right now, so we should be able to get this filled. Then close it if it goes up, close it if it goes down. And again, remember, these are orders that are, at least on the downside, on the stop side, that may get gapped around and may have a challenge getting filled. So we have to pay attention to this, right? So I'm going to click on confirm and send. We're going to read through this order, make sure that we're aware of that. We know what our initial margin is, and this is there's at least not available on Thinkorswim. There's not a micro heating oil futures contract. So we're talking about the big contracts. So the initial margin is going to be this 6,942. So this is going to be a relatively pricey trade from that margin standpoint. Remember, we've got our exchange designated fees. These are transaction fees, not commissions in this case. And we've got our order in place to take that trade off. So I'm going to put this in our futures group. We're going to click on send, and we're going to fire that order off. And it filled because we were already at that point. We were already above that buy stop point at which we're looking to get that trade on and looking for that upward movement. So we're hoping in this case for that continued move out of this bull flag towards that upside, right? So let's do this. Let's pop back over here to the bigger grid. This is the 1 year grid. And so you can see where our move is in that bigger context, right? We're looking for this move really back up on those intraday candles, back up to the high of this most recent high candle. So kind of moving back up towards that range. Now, we've put in an order to take that trade off because this is a shorter term trade. Longer term traders of this contract could look at entering this trade the way that we did on this move, and then looking for that bigger move that we talked about earlier, that bigger move back up to that 2.2 level, kind of that resistance on this right-hand side. That would be a multiple day trade, and then we'd have to deal with overnight margin and those types of things. So again, it could be traded either way. We're trading this as a shorter term trade. We could take this trade, that intraday trade that we entered here in this particular case, could end up being, if this never moves to the upside and just kind of hangs out in this range right here, that could sit there for a couple of days. However, given the current level of volatility in this contract, it's likely that this move either to the upside or to the downside would be made relatively quickly. Now we pop back over here. Let's just go through our specifications, because I know there are a number of you who are brand new to trading futures. We just went through Introduction to Futures at the Advanced Options Workshop in Anaheim. We did a quick segment on Introduction to Futures, and we talked a little bit about some of these things. So let's go through this label set. Now, this is a grid label that I've scripted using ThinkScript. I will share this label in the comments right now, but it's also in the description section of this webcast so that you can get it. So let's do this. I'm going to pop to my chart studies, and I'm going to take this grid that I've created. I'll go ahead and I'll share it. Now, anytime we share anything like this or a study or a watch list or anything else, this is for illustrative and educational purposes only. The things that we share are not guaranteed as to time or accuracy. So I'm going to click on that, and we're going to send this off. I'll put that out there in the chat. It's also in the description. Now, that grid label, all that does is it simply shows us, let's do this, shows us what the specifications are for this particular contract. So the tick size. Tick size is the minimum increment of this movement of the value of this contract, right? So in this particular case, the minimum tick size is 0.0001. So that means the digit that we're concerned with is this one right here that I'm putting my cursor on, the 2.0682. When that 2 changes to a 3, that's a 1 tick move. That tick value, every time that moves, is worth $4.20. So if it moves from 2.0684 to 2.0687, that's going to be a move, however many points it moves, times $4.20. So every point that moves, meaning if this moves from 2 to 3, that's $42,000, right? Because of the decimals here, right? So this is moving in our direction. So if we were to take our tick value if we take our point value times the price of the contract, that gets us to our notional value. So that's how we use this particular grid. So point value times this gets us to this notional value, what that contract controls. Then one other component that we need to pay attention to, and we talked a little bit about this in previous classes, but that is the initial margin and the maintenance margin. So we're going to pop right here to the drop-down box on the symbol, and I'm going to go to the sub-tab that says futures. And here's my heating oil futures. So this is where we get that tick size, that tick value, and then the initial margin required to be put up to initiate an entry into a position, right? So if we go long, we've got to put up 69.42. If we go short, we've got to put up 69.42. And then once that trade is initiated, that initial margin becomes what's called maintenance margin, which is typically 5 to 10% less than the initial margin. Then likely there's price movement in one direction or the other. So your account's going to be incrementing either higher or lower based on that price movement. So that's how kind of we look at that kind of informational view of that futures contract. So let's go back to our shorter term grid. It's moving in our favor. That's what we want it to do. We're going to go back to our monitor tab and see what this looks like. So I'm going to go to our futures contract here. We'll open this up. Here's our position. 27 days to go in this most active contract. Now we're going to enter the most active contract by default is what's going to be displayed on the chart, but that's something that we'll pay attention to as well, especially as we get to close to those delivery dates on those contracts, is whether we're trading a contract that is close to its delivery date. That may still be the active contract, but more of the volume may be rolling to another contract. So something to pay attention to. So here's our trade price. Here's where it's currently trading. You can see our mark change, our profit and loss from the open, and our profit and loss on the day. So this contract right now is working in our favor and doing what we expected it to do in this particular case. So once again, now that we kind of have all that out of the way, thank you again for joining us. Thanks for being here, and thanks to Michael for helping to cover this class over the last couple of weeks. One of the things that I'm going to ask you to do at this point is click on that subscribe button down at the bottom of the page if you haven't done so already. That's going to help you to stay connected to this Trader Talks webcast channel and to all of this content. It makes it easier to get to the recordings. It also brings that content up to the top for other people. So also click on that like button if you happen to like what you're seeing today. And by all means, chat your comments out there into the chat. There's a lively conversation and a chat going on. I want to pop over here really quickly to my futures grid and kind of see what's going on in the equities market. And let's start with the S&P 500 E-mini futures. The market was a little bit down overnight on the futures standpoint, but now seems to be kind of recovering, maybe getting a little bit, well, it's kind of toggling back and forth here between green and red with this little bit of a hanging man type of candle, but we're sitting at a bit of a resistance. Not much of a push up through this resistance level. And one of the reasons might be, hey, it's the week after Memorial Day. Everybody's kind of coming back and getting things up and running again. I mean, we're getting into summer. Markets tend to slow down a little bit in the summertime, so we don't see a lot of movement here. We're seeing back and forth still, with some complacency now coming into place with tariffs and other factors from a policy standpoint, from a macroeconomic standpoint. So there's not a lot of catalysts here moving this market, at least at the moment. And we can see that playing itself out here in the futures contract. So this is kind of the dual nature of futures, is that we can use them to kind of get a sense of what's going on, as well as using them as a tradable instrument. But today's class, obviously this particular webcast, the title of the webcast is Trading Futures. So we're going to take that for that perspective, right? So running into this resistance level here on the NASDAQ, again, same kind of thing, very flat RSI, not a lot of momentum pushing one way or the other, not a lot of movement happening in the two big broad market indexes, but a little bit more movement happening in the Russell 2000 and the small caps. A little bit more of a move to the upside today, a little bit more follow through, a little bit more RSI push to the upside. So we have RTY as the big contract. But the other thing I was going to look at, and let's pop back down to our futures movers grid. And let's take a look at /M2K. Now, this is the micro Russell 2000 contract. So I'm going to make this grid a little bit larger here, taking a look at the micro contract. So tick size here is 0.1. So this is our significant digit, 2079.5. It's the 0.5 that we're concerned with. Each time that moves, that's 50 cents. Point value, if this moves from 2079 to 2080, that's $5. You can see the resultant notional value, $5 times 2079 gives us that 10,396. Notional value is significantly less here in this particular case. And if we look at our futures contract and we look at our micro E-mini Russell 2000 futures, our initial margin substantially less than the margin that we had to put up for that heating oil contract. John asks a great question. Are there any futures that are more active in the summer months? Oftentimes crude oil and heating oil can be more active in the summer months. Grains may heat up in the summer months as we start to see, especially if there is weather. So we could come down and we could take a look at some of the grain futures here. We'll take a look at corn, first of all. That's one of the grain futures. Grain futures can oftentimes get more active in those summer months, simply because there's potential weather impact on the total crop size and harvest conditions and those types of things, right? So if you get a rainy summer, that's going to move these grain futures around a little bit. Geopolitical issues also can, but typically things like the equity markets, those equity markets futures tend to slow just a little bit as we get into these summer months. There's that old adage in the market, and it's not, I mean, it's mythology to be sure, but it's sell in May, go away, right? That, traders take summer vacations and those types of things, those markets tend to slow down. Whether that's true or not, I mean, again, that is part of the market mythology. But let's take a look again. Let's go back to our /M2K. And I wanted to look at this from a couple of different perspectives because we can do a couple of things with this. Let's pop into our shorter term time frame here, and I'm going to zoom in on the right hand side. And I was noticing this kind of bull flag pattern this morning, looking for kind of a break out of this range, and we're not seeing it. In fact, we're seeing kind of this squeeze on these 5-minute candles, kind of this squeeze into a short-term symmetrical triangle. If we were to draw those lines here, I'm going to draw those lines like this, maybe make that kind of that cobra type pattern, and now we're kind of breaking down to the downside. And all I'm doing is I'm using this as a means to define the range in which this is moving. As we get towards the apex of this, it's going to move one way or the other. It's going to move down, or it's going to move up, or it's going to move sideways out the front of this particular pattern. So given that the kind of short to intermediate term trend, meaning on 5-minute candles, if we zoom back out, has generally been to the upside, the general, from a technical analysis perspective, thought might be that this would make a break, if we were to draw that trend line, to the upside. If it's going to hold that diagonal trend, and we're seeing that little bit of a squeeze against that, the thought is that we hold this diagonal trend line and it continues to move to the upside. But that doesn't seem to be what it's doing at the moment. In fact, we're seeing kind of this double bottoming of momentum, although there is a little bit of an echo there. So from a trend perspective, this is kind of coming back in towards that range. We may be seeing a little bit of a bounce here to the upside. Now, is that a tradable bounce from this standpoint in this particular case? Yeah, there you go. I like that, Sergeant Chuck. According to the Trader's Almanac, June is the latest and slowest month for the last 15 years. Yeah, generally so, right? So we're getting this little bit of a bounce, maybe a bit of a hammer candle. I'm going to zoom back in here. So I'm going to look at taking this trade to the upside in this particular case. Now, here's something to think about. If we're going to add a /M2K contract and we're going to go long that contract, that's going to benefit from the Russell 2000 moving higher. We go back to our trade tab or our monitor tab here, and we've got a group of stocks in this list that is /M2K that is relatively sensitive. We'll put RA2, we'll use the index here. Let's see if we can do that. Let's see, it's not letting me not letting me beta weight this. Let's see if we can beta weight this. We'll see if we can beta weight this portfolio. We're using fast beta. Let's see if we can get it to beta weight to something else. NDX. Nope, we're not getting. Let's do AAPL, see if we get any kind of beta weighting. We're not getting any beta weighting. So my thought in doing this is these are positions that are relatively sensitive. There we go. That's the individual beta weighting, and it's not giving me my beta weighting total. These are positions that are relatively sensitive. It's not giving me the total, but it is giving me those position deltas based on the Russell 2000. So if I go /M2K, there's my position sensitivity, right? So I've got positions, AbbVie, Calm, Disney, JP Morgan, that are relatively sensitive to movement of the Russell 2000. That means if the Russell 2000 moves up, that's going to benefit these positions. If the Russell 2000 moves down, that's going to take away from or act as a drag on these positions, right? So if we're bullish on the small caps, like we looked at here on the chart, and it's starting to move to the downside, adding a long position here in the Russell 2000 is going to augment that upward sensitivity, that bullish sensitivity. It's going to add to that. If we were to go short a /M2K contract, that's going to act as a hedge. That's going to benefit if that contract is going to benefit if the price goes down. Our position is going to benefit, but it means that we're losing some in those stock positions that we have. So a hedge isn't designed to be a profit-making position. It's designed to be an offset to adverse movement somewhere else. So adding a long position here is going to add to the performance of this portfolio. Adding a short position in /M2K is going to be an offset to downward movement in those positions. And it's going to come at a cost because, number one, we're going to have to put up that margin. But number two, if we start to see that contract moving down significantly, we start to see the M2K moving down significantly, that means that we're losing in our long stock position. So you've got to be careful in hedging in that you don't get caught on the wrong side of what you want that hedge to do. So because I'm still bullish on this, because I'm still bullish on this potential bounce on /M2K in this particular case, I'm going to look at going long the contract here to add or augment to our long positions in that stock portfolio. So what we're going to do in this particular case is I'm going to go long this contract, and I'm going to put alerts on this contract, not necessarily stops in this particular case. And then there's one other thing I want to show you in this discussion. So I'm going to put an alert actually right down here at about the 266 mark. So I'm going to draw in a support level because I see that as kind of a support in this short to intermediate term. And I'm going to right click and I'm going to create an alert so that it lets me know when this price goes at or below that level. And then it's going to ring a bell. It's going to send me a text, those types of things, right? That's my alert. On the upside, I'm not so concerned, but I may add an alert on that longer term chart. So I'm going to go long this contract here at this point. And one of the ways that I can do that right here on this particular chart. I can right click on the chart and I can go long the chart, okay? One of the other ways that I can do this, and this is the other thing that I wanted to show you, is if I go to my active trader grid, actually this active trader demo that I've put together. So let's put /M2K. Now I know that my good friend Michael Fairborn and also Brent Moores both have put together webcasts talking about how to use the active trader ladder. So there are lots of webcasts out there, but I'm introducing you to this idea really slowly. Over the course of the next couple of weeks, I want to spend a little bit more time with this active trader ladder. So what I've got here is over on the right-hand side. If you go to the trade tab and you click on active trader, this is what you're going to get. You're going to get a chart and you're going to get the active trader demo. I'm sorry, you're going to get the active trader ladder. So I'm going to do /M2K. We're going to put that back in here. And here's what we have. We have volume traded. We have current bid size at price levels, and we have current ask size at price levels. We've got some big buttons up here, and then we've got the small buttons. So there's a lot going on here, which is why I want to kind of break this down slowly. So if I want to create an order to go long, I'm going to click in this bid size corresponding to the price at which I want to put that order in. I can also simply click on buy market, and that will buy where the current market is. And you can see where that current market is simply by where that box is currently gray, right? So you can see that the price is moving quickly between 2077.3 and it's jumping around. Now it's 0.4. As those ticks happen, as those ticks occur, on this chart. So it's starting to move back in an upward direction. So if I wanted to place a buy stop order to get into this trade, you can see that my cursor, where I move my cursor, highlights that box. So I can zoom in and I can say, look, I want to get into the trade right here. If it breaks above this diagonal trend line, which is at about 2077.60. So now I can come over here and I can go hover my cursor over that 2077.6, and I can initiate an order to buy one contract at that level. And because it's above the market, it's going to create a buy stop order. If I were to put an order in down here, that would be a buy limit order. So we're going to put in this buy stop order at this point. And we're going to put it in at 2077.6. And if I left click, then it pops up my order dialog box like it normally does. We can see our buying power effect, our exchange generated transaction fees, and where we're going to put this. I'm going to put this in my stocks group so that I can keep track of it. And I'm going to go ahead and I'm going to click on send. And we're going to fire that order off. And there's my buy stop order. So if this market starts to come back up and move through that level, that's where that order is going to get get triggered. Now, once that order is triggered, that's going to generate a market order, which is going to get worked as an exchange designated limit order within those protection points. So that isn't to say as at that order gets triggered that it's going to fill immediately, right? Because that becomes now a market order. But I also noticed that there's a fair amount of volume around that price, so I'm not terribly worried about whether or not that order is going to get filled. So if we wanted to just simply cancel that order, we can do that by clicking on the X. Now that order is gone. If I just wanted to simply buy this order at the market, right, where that market currently is, and you can see that if I'm hovering my cursor over that big button at the top, it's got buy +1 market, and that's moving with the market. I can simply click on that button, bring that order up. There's my order specifications. I can determine where I'm going to put it in my stocks group, and I can click on send and fire that order off. And now that order has filled, right? So when we're talking about quick movements in the market, the active trader ladder may be quicker to put orders together. Now, there's some other things that we can do. We're not going to talk about them in today's discussion because I want to keep breaking this down. And of course, it goes down when we put that order in. We're in at the market and it's moving in a downward direction now, and it just ticked to the downside. So we'll see if it continues to move that way. But there are some things that we can do with this active trader ladder in terms of building templates. We can put some templates together that will create our OCO bracket orders, that will create our first triggers other orders. So it can be a very helpful and efficient tool for placing those orders. Now, what's kind of cool in using the active trader ladder is that we can do a couple of things. If I said, wow, look at that. I entered this /M2K E-mini Russell 2000 index futures contract to the upside. And I bought the contract because I thought it was going up. And look at what it did in this last candle. It broke to the downside, and I wanted to reverse my position, meaning I wanted to close my long contract and open a short position in that futures contract. I can do that with the reverse button. If I want to say, fine, just get me out of everything, close the position, and take me to flat, meaning no position whatsoever in this contract, I can click on the flatten button and exit the position. So let's do that here in this particular case. I'm just going to go ahead and click on the flatten button, and it'll say, are you sure? This will close that position. It'll create an order to sell that contract, and it'll eliminate my position. So if I have multiple contracts, right, in a particular instrument, I can choose to close some of those contracts by sending an order to close some of those contracts, or I can click on that flatten button, which will eliminate all of them. It'll make me completely flat. That may have been it, AJ, with that JOLTS number coming out. So we got a big long-tailed candle there, maybe acting as a hammer. So we'll see if this continues to move to the upside. So once again, I'm going to come in and I'm going to put in that buy stop order at that level. And I'm going to put it in here where there's a lot of trading volume. We're going to go buy one contract with a buy stop at 2076.90. And we'll put that in our stocks group and I'll click on send. And that's our order that's waiting to be filled if this goes to the upside. But I wanted to demonstrate some of those big buttons. And you're right, see, flatten is a market order. So that's going to get worked as an exchange designated limit order. So if the market's not moving quickly, it may take a minute to flatten that out. It may not flatten immediately. In a fast moving, in a liquid market, it could it could do that pretty quickly. Sergeant Chuck, I like that comment, right? Sergeant Chuck says, after using a couple of other platforms for futures, this active trader ladder, by far my favorite, that reverse and flatten being one of those tools. Now, the great thing is, and again, we'll dig into this a little bit more, is we can start to customize what we put in this active trader ladder. But what I'm going to do for you right now is I'm also going to share this grid that I've created, which is the 1 day 5-minute grid over here with a moving average on it and the active trader ladder. So I'm going to come over here and we'll click on share grid, click on share. Again, remember, anytime we share anything from the platform, it's for illustrative and educational purposes only. So we'll do that. I'll put that out there in the grid. I will also put this in the description page for this webcast based on those descriptions, so that if you're watching this in the recorded version, you can come back and you can grab that at your leisure. Now, the other contract that I wanted to look at really quickly, and there goes our long M2K contract. The other contract that I wanted to look at here real quickly in the last couple of minutes is /SIL. Silver was moving this morning. I'm going to zoom in a little bit more closely. Seems to be giving me that little bit of a bull flag, and it's been following this diagonal uptrend line to the upside, starting to make that move to the upside. So what I'm going to do in this particular case is go long the smaller silver contract that we've done before, looking for that move back up here to the upside. So what I'm going to do is I'm going to put this order on and initiate the position, and then I'll come back in and I'm going to put in a limit order to exit the position if it makes that move to the upside, and a stop order. I want to spend a little bit more time next week. So if you're here with us next week, join me for this webcast, because we're going to talk about building bracket orders and templates here in the active trader ladder. But I want to go ahead and I want to initiate this position right now. So I'm going to put this in at a buy stop here at 34.52. And this is the smaller contract, so my initial margin is a little bit smaller as well. I'm going to put this in my futures group, and we're going to click on send and fire that order off, and we'll see if that moves to the upside to fill. But guys, as we do this, again, this is a great opportunity to click on that subscribe button and click on that like button if you like what you see. If you want to learn a little bit more, let me bring up some resources here, and I'll put them up here. Let's pop that right there. Here's our Trader Talks webcast page. If you want to learn a little bit more about Active Trader, click on active or type in Active Trader. Here's Cameron May talking about placing trade orders faster with Active Trader. Here's Brent Morris talking about the basics of the Active Trader tool, understanding the Active Trader tools, using the Active Trader tools. So lots of great information to be able to utilize some of the tools that are here on the Thinkorswim platform. So some good opportunity for you to spend a bit of time. My thanks to Michael Fairborn for helping out. My thanks, of course, as always, to all of you for being here. And my thanks to our great production staff for helping us to bring this webcast to you, and our great reviewers, Nikki and Mindy and Kathy and everybody else, we appreciate you being here and doing what you do. Thanks for being here with me. I will be back. I believe I'm on the network a little bit later today, and then I'll be back tomorrow teaching index options. But lots of great stuff coming up today on the Trader Talks webcast channel. We'll see you all very soon. Take care, everybody. Bye-bye.